Hey guys, you've joined us live on Moneycontrol. I'm Manisha Gupta and we're talking about the agriculture commodities today, which also are industrial commodities. But the street is clearly divided on what the global demand growth is going to be. And we have seen these commodities act differently because of that. I'll start with cotton, where we are trading at a 6-week lows right now. And that is because there is a decline in global trade. The export numbers also seem weak, and the sales numbers also on a week-on-week basis have been moving slightly lower. There also is an interesting USDA report which says that the US weekly export sales numbers are down 72%. So that tells you that the interest clearly seems to be waning here. Also, when you look at the Indian cotton crop estimate, that has been on the weaker side. India may not be exporting as much. Indian cotton prices also are slightly at the premium from where the global markets are. But even with that, neither global or the Indian markets are getting any support from that. Whatever arrivals are coming into India for cotton are being taken by the mills. So it is quite hand to mouth. It is as and when required, and there is no premium into the prices here as well. There also is a WASDE report which says that the large ending stocks is what they are anticipating for this year. They also are looking at a higher world production from the other producing countries, and the demand is yet to catch up. The Chinese demand is something that everybody was betting on, but that is yet to start showing up in numbers. That's about cotton, where we have seen some decline. So that could be positive for the textile mills and for the clothing industry there. But the other commodity is rubber, and here the prices have continued to run up. Not such a great news for the rubber consumers like tires, glove makers, footwear makers, etc. So in case of rubber, we are looking at prices trading at a 6-week highs. 2.5% of a jump up in the global markets has been seen overnight, and the Indian rubber prices, the RSS4 variety, which we track closely, is trading at now at 186 rupees per kg. In case of rubber, the Chinese demand is seen strong. The car sales for the month of March were positive. The automotive making numbers for the month of March jumped up by 15%. So the tire requirement does continue strong. Also, a report from International Rubber Consortium says that they are looking at supply tightness in the first half of 2023. All the major producers like Indonesia, Malaysia, Thailand are looking at lower crop production this time around. Malaysia production has declined by 2.7% on an year-on-year basis. There has been concern with yield, unseasonal rains. There is some leaf disease which is going on. There has been drought in various Asian countries, and that's weighing onto the rubber production, while the demand does seem quite strong. For the year as well, you almost see consumption higher than what the production seems to be coming in, and that is expected to support rubber going forward. If the demand continues strong, rubber prices are going to be in positive going forward.